Your money in the bank doesn't belong to you. That's not a metaphor. That's not conspiracy theory. That's the legal structure of the modern banking system. In 2019, Lebanese citizens woke up one morning to find the banks had locked their doors. Not because of war, not because of natural disaster. The banks simply decided that the deposits people had trusted them with for decades were no longer available. Life savings, gone. Retirement accounts, frozen. Business payroll, inaccessible. An entire middle class, people who had done everything right, who had saved responsibly, who had trusted the system, were wiped out in months. And here's the part that should terrify you. This didn't happen in some failed state or distant dictatorship. This happened in a country with smartphones, with international banking connections, with educated professionals and a functioning government. Lebanon had ATMs and credit cards and mobile banking apps, and none of it mattered when the system decided to lock you out. If you think this can't happen in America, in Europe, in any developed nation, you're about to discover why your bank account is just numbers on a screen that can disappear the moment the system needs them to. And that moment is coming faster than you think. This is the financial historian. Let's talk about what happens when banks become prisons for your own money. Before we understand what happened in Lebanon, you need to understand what a bank deposit actually is, because what you think it is and what it legally is are two completely different things. You walk into a bank, you hand them cash, they give you a receipt, an account balance, a number on a screen. You think you just stored your money, that the bank is a vault holding your cash safely until you need it. You're wrong. The moment you deposit money, it stops being yours. Legally, you have given the bank a loan. That deposit is now the bank's liability to you, not your property. The bank owns that money. They can lend it out, invest it, gamble with it. And what you have is a promise that when you ask for it back, they'll give it to you. This isn't radical banking theory. This is how every bank in the world operates. It's called fractional reserve banking, a system invented centuries ago when goldsmiths realized that if they held 100 coins, they could issue 200 receipts because most people never came to claim their gold at the same time. The trick worked then, it works now, but only as long as everyone believes the promise. Here's the catch. Banks don't actually have your money sitting in a vault. In the United States, reserve requirements are zero. That's not an exaggeration. Since March 2020, American banks are required to hold exactly $0 in reserve against your deposits. Zero. Think about that. The money you believe is sitting safely in your account doesn't exist as cash. It exists as a ledger entry, backed by loans the bank made to other people, secured by assets that may or may not hold their value. And when something goes wrong, when those loans default, when those assets lose value, when confidence cracks, the promise breaks. And you discover that the money you thought was yours is gone. Throughout history, this moment has repeated over and over. In medieval Florence, the powerful Bardi and Peruzzi banking houses collapsed in the 1340s when England's King Edward III defaulted on massive loans. Depositors lost everything. The families who had trusted these banks, some of the most respected institutions in Europe, were ruined. In 1933, during the Great Depression, so many American banks failed that President Franklin Roosevelt declared a bank holiday, shutting down the entire banking system to stop the panic. When the doors reopened, thousands of banks were gone, and millions of Americans had lost their savings. In Cyprus in 2013, the government and European Union imposed a bail-in, a polite term for confiscating deposits above a certain amount to save failing banks. People woke up to find their accounts had been raided by their own government to cover bank losses. Sound familiar? Because Lebanon is just the latest chapter in a very old story. The only difference is how brazen it's become. Lebanon in the early 2000s looked like success. Beirut was called the Paris of the Middle East. The banking sector was sophisticated, offering high interest rates that attracted deposits from wealthy Lebanese living abroad. The Lebanese pound was pegged to the dollar at a stable rate. Everything seemed fine, but underneath, the system was a Ponzi scheme. The Lebanese government was running massive deficits, borrowing far beyond what it could ever repay. The central bank, Banque du Liban, was financing this by offering absurdly high interest rates on government bonds, sometimes exceeding 20%. Where did the money come from to pay those rates? Not from productive investment or economic growth. It came from new deposits. This is the definition of a Ponzi scheme, using new money to pay returns to old investors, pretending it's profit when it's just a circular flow destined to collapse the moment new money stops coming in. And the Lebanese banks were in on it. They parked their depositors' money in these government bonds, earning those high rates, and passing some of the return to customers to keep them happy. Everyone was making money, everyone felt rich. The numbers kept going up, but the numbers were a lie. By 2019, the game was over. Foreign currency reserves were running out. The government couldn't pay its debts. The currency peg to the dollar was about to break. And the banks knew it, so they did what banks always do when the con is exposed. They locked the doors. At first, it was informal. Banks didn't officially freeze accounts, but suddenly, you could only withdraw tiny amounts each week. Maybe $200, maybe $300. Barely enough to buy groceries for a family, let alone pay rent or run a business. Then the controls tightened. Credit cards stopped working abroad. Transfers out of the country were blocked. The official exchange rate said $1 equaled 1,500 Lebanese pounds, but on the street it was 10,000, 20,000, eventually over 90,000 pounds to the dollar. The currency collapsed by more than 90%. Think about what that means. If you had $10,000 in a Lebanese bank in 2019, by 2021 it was worth maybe $1,000 in real purchasing power, a 90% haircut, not because you spent it, not because you made bad investments, because the system needed your wealth to cover its losses, and you had no choice. The money was trapped, the banks controlled it, and the government backed the banks, not you. Let's talk about what this looked like on the ground, because numbers don't capture the horror of watching your life savings evaporate while you're powerless to stop it. Doctors who had spent decades building practices, saving money, planning for retirement, wiped out. Engineers who had worked abroad and sent money home to secure their families' futures, gone. Small business owners who kept operating cash in the bank to pay suppliers and employees, locked out, forced to shut down. Retirees who had lived frugally, who had done everything right, found their pensions worthless. People who needed medical care couldn't access their own money to pay for it. Students studying abroad were stranded when their parents couldn't send tuition. The middle class, indeed the people who played by the rules, who trusted the system, who saved instead of spending, were destroyed. Meanwhile, the wealthy elites, many of them saw it coming. They moved money out of the country before the controls hit. They shifted into dollars, into foreign real estate, into assets outside Lebanon's reach. The people connected to power, the ones with inside information, protected themselves. This is the pattern that repeats in every financial collapse. The insiders escape, the outsiders pay. Protests erupted, people marched in the streets demanding access to their own money. Some depositors, desperate and furious, stormed banks with fake weapons, trying to force tellers to give them their savings. The media called them criminals, but who's the real criminal? The person trying to access their own money or the bank that stole it? And the Lebanese government? They sided with the banks. They passed laws formalizing the capital controls. They protected the institutions, not the people, because that's what governments do in a crisis. They save the system that serves them, not the citizens who depend on it.
Here's what most people don't understand. What happened in Lebanon was legal. The banks didn't break the law. The government authorized everything. That's the terrifying part. Your deposits can be seized, frozen, or devalued, and it's all perfectly legal because the law was written to protect banks, not depositors. In 2013, when Cyprus faced a banking crisis, the European Union introduced a new term, bail-in. Instead of taxpayers bailing out failing banks, depositors would take the hit. Accounts above a certain threshold were confiscated, not borrowed, not temporarily frozen, but taken to recapitalize the banks. This wasn't a one-time emergency measure. It became policy. The United States, the European Union, Canada, and other developed nations have since passed laws allowing bail-ins. It's written into the legal frameworks that govern banking. Your deposits are classified as unsecured debt, which means in a crisis, you're at the back of the line. Think about that. If a bank fails, bondholders get paid first. Shareholders get paid. And you, the depositor, are treated as a creditor who may or may not get anything back. And don't count on deposit insurance to save you. In the United States, the FDIC insures up to $250,000 per account. That sounds reassuring, until you realize the FDIC's total insurance fund is around $125 billion. American banks hold more than $18 trillion in deposits. Do the math. If multiple large banks fail simultaneously, the FDIC fund is a rounding error. The government would have to print trillions to cover depositors, which means inflation, which means your money loses value anyway. You get your dollars back, but those dollars buy half as much. Either way, you lose. Lebanon proved that when the system is in trouble, your deposits are not safe. They are the first thing sacrificed to keep the machine running. So how do you know when your country is heading toward a Lebanon-style collapse? The warning signs are always the same, and they're flashing right now in more places than you think. First, unsustainable debt. Lebanon's government was borrowing far beyond its means, running deficits for years, pretending everything was fine. Sound familiar? The United States has $36 trillion in national debt and counting. Europe is drowning in obligations. Japan's debt exceeds 250% of GDP. When governments owe more than they can ever realistically repay, they will eventually steal from their citizens to cover the gap. Second, currency instability. Lebanon had a currency peg it couldn't defend. When the peg broke, the currency collapsed. Watch for countries with fixed exchange rates, with falling foreign reserves, with central banks printing money to cover deficits. These are warning signs that the official exchange rate is a lie, and a collapse is coming. Third, high interest rates as bait. Lebanon's banks offered 20% returns. That's not normal. That's desperation. When banks or governments are paying unusually high interest, they are not rewarding you, they're bribing you to stay in a Ponzi scheme. And when it collapses, those high returns disappear along with your principal. Fourth, capital controls. Even before the full freeze, Lebanon had started restricting currency flows. Limits on withdrawals, restrictions on international transfers, delays in processing requests. These aren't bureaucratic inefficiencies. They are preparations for lockdown. If your bank or government starts limiting access to your money, get out immediately. Fifth, bank runs and closures. In 2023, the United States saw the second largest bank failure in its history, Silicon Valley Bank. Then Signature Bank. Then First Republic. These weren't small institutions. These were banks holding hundreds of billions in assets. And they collapsed in days. The FDIC stepped in. Depositors were made whole, this time. But each failure exposes the fragility. Each rescue depletes the system's reserves. And each time, the risk grows that the next failure won't be contained. Lebanon is not an isolated case. It's a preview. If you think this is a problem for distant countries with weak institutions, look closer. The mechanisms for freezing your money already exist in the United States, Europe, and other developed nations. After September 11th, governments expanded their power to freeze accounts under the guise of fighting terrorism and money laundering. The Patriot Act in the United States gave authorities sweeping powers to monitor and control financial transactions. Similar laws were passed across Europe. These powers were sold as targeting criminals. But the infrastructure is neutral. Once it exists, it can be used for any reason the government deems necessary. And in a crisis, necessity is defined by whoever holds power. In Canada in 2022, during the trucker protests, the government invoked emergency powers to freeze the bank accounts of protesters and their supporters. No trial. No due process. Just an order, and your money was gone. This wasn't a dictatorship. This was Canada, a democracy with rule of law. And yet, Bank accounts were weaponized against citizens for political reasons. If it can happen in Canada, it can happen anywhere. And remember Cyprus in 2013. That wasn't a poor country. It was part of the European Union, a member of the Eurozone, a developed nation. And depositors still had their accounts raided to save failing banks. The legal framework for this is already in place. Bail-in laws exist. The infrastructure to freeze accounts exists. The only thing missing is the trigger, a crisis severe enough that governments decide protecting banks is more important than protecting you. And that crisis is coming. Lebanon's collapse was brutal, but it was contained to one country. The next crisis will be global. The world is drowning in debt. Governments, corporations, households, everyone owes more than ever before. Global debt exceeds $300 trillion. Interest rates have risen sharply since 2022, making that debt more expensive to service. Defaults are inevitable. And when defaults spread, banks take losses. When banks take losses, they freeze withdrawals to prevent runs. When withdrawals are frozen, panic spreads. It's a cascade that moves faster than regulators can contain. In Lebanon, people at least had the option to hold physical cash, to trade in dollars on the black market, to move goods and value outside the banking system. But the next crisis will happen in a world where cash is disappearing. Central banks are moving toward central bank digital currencies, CBDCs. These are digital dollars, euros, or pounds controlled entirely by the government. Every transaction is tracked. Every account can be frozen with a keystroke. There is no physical cash to withdraw, no black market to escape to. If you think this sounds dystopian, understand that it's being sold as progress. Convenience. Efficiency. Safety. But the moment your money is fully digital and fully controlled, you are at the mercy of whoever controls the system. And Lebanon showed us exactly what that mercy looks like: none. So what do you do when the system is designed to trap you? You prepare before the doors close. First, diversify your deposits. Don't keep all your money in one bank, or even in one country. If you have significant savings, spread them across multiple institutions, multiple jurisdictions. If one bank fails or imposes controls, you have access elsewhere. Second, hold physical cash. Not all your savings, but enough to survive weeks or months without access to banks. When Lebanon's ATMs stopped dispensing cash, people who had physical currency could still buy food, pay bills, and function. Everyone else was helpless. Third, own real assets. Real estate, commodities, things that have value independent of the financial system. When currencies collapse and banks freeze, tangible assets hold their worth. Land can't be deleted with a keystroke. Fourth, develop skills and relationships. In a crisis, your ability to create value through work, through trade, through community is more important than any bank balance. Skills can't be frozen. Relationships can't be seized. Fifth, understand the system. The people who escaped Lebanon's collapse were those who saw it coming. They understood the warning signs. They didn't trust the promises. And they acted before it was too late. The system depends on your ignorance. It depends on you believing that banks are vaults, that deposits are property, that governments will protect you. These are lies. The truth is that your deposits are loans to institutions that will sacrifice you to save themselves. And the moment you understand that, you can stop being a victim and start protecting what's yours. In 2019, Lebanese families went to bed thinking their money was safe. By morning, it was gone. Not stolen by criminals. Taken by the system they had trusted for their entire lives. Doctors, engineers, teachers, retirees, an entire middle class, wiped out in months. And the banks, the government, the institutions? They survived. They always do. Because the system is designed to protect itself, not you. This wasn't a failure of Lebanon. This was the system working exactly as designed. When crisis comes, deposits are seized, savings are confiscated, and ordinary people pay for the mistakes of the powerful. And if you think this can't happen where you live, you're not paying attention. The laws are already in place. The infrastructure already exists. The warning signs are flashing. Silicon Valley Bank collapsed in 2023, the second largest bank failure in American history. Regional banks are teetering. Debt is exploding. And every crisis brings us closer to the moment when your government decides that saving banks is more important than protecting your deposits. The only question is whether you'll see it coming. Whether you'll prepare before the doors lock. Or whether you'll be one of the millions standing outside a closed bank, demanding access to money that's already gone. Lebanon taught us what happens when you trust the system. Don't make the same mistake. History doesn't repeat, but if you ignore it, it will crush you all the same. If this gave you a new perspective, hit subscribe. History has the answers, I'll show you where to look.